Welcome to In Depth for a look at what is making mining headlines in the Americas. Gold has reached consecutive records so far this year, even topping the psychological $1,500 level. But most gold miners have not seen their shares rise as a result. Mining Week's deputy editor for North America, Lizzo, who is based in Toronto, Canada, joins me to discuss the issue. Welcome to the show, Lizzo.
Hello, Martin.
Lizzo, how have gold stocks performed amid these record gold prices?
I think as a whole, it would definitely be safe to say that the gold sector has underperformed, particularly as we see gold setting these consecutive new highs. I think obviously part of that can be attributed to the introduction of the exchange traded funds, which allow investors to invest directly into gold. A lot of the producers have issued equity, issued new shares in recent years, and so that's something that weighs on the price. And then, of course, there is a concern, I think, in the markets about the ability of the producers, and particularly the bigger companies, to continue replacing the reserves and replacing the production going forward and looking beyond the next few years. So we certainly have seen the gold stocks underperform, lagging the performance of the gold price itself. And I think if we look at perhaps May 2nd, which was when the last new high was set by gold before it pulled back, a lot of the gold producers at that point were actually down on the year. And you would have to look very closely to be able to find any gold companies that had actually kept pace with the increases of the gold price. One of those at the time, of course, was Goldcorp, Vancouver-based company, the second biggest gold producer in Canada. But then on the other end of the spectrum, you have firms like Kinross Gold, which has lost something like, in fact, more than 25% of its value so far this year.
Would you say that the companies are starting to feel pressure from investors?
Absolutely, I think so. In fact, Kinross Gold held its annual shareholders meeting here in Toronto earlier this month. And there were some very tough questions from some quite aggrieved shareholders wanting to see the share price perform better, not only compared with the company's peers, the other gold producers, but also, of course, compared with the gold price itself. Of course, Kinross is a bit of a different situation. The company issued a big chunk of shares last year to pay for its big acquisition of Redback Mining. And so that, of course, would weigh on the share price. But I think in general, investors would certainly like to see the gold sector as a whole perform better.
Obviously, higher dividends are one of the options that gold miners can consider. Are they looking at returning more money to shareholders?
Yes, I think that is something we will continue to see. A lot of companies, in fact, Yamana Gold, a Toronto-based gold producer, just announced this week an increase in its quarterly dividend payments. And most of, if not all of the big firms have announced dividend increases. Some of them that maybe weren't paying before have instituted new dividend policies over the last 12-18 months as we've seen the gold price rise. Of course, Newmont Mining took it a step further. That's the second biggest producer in the world by production volume, based in the US. And they announced quite an innovative new dividend policy that's actually linked to increases in the gold price. So as the gold price goes up, their dividend payments automatically go up. And I think that is quite attractive to investors that means they automatically get that exposure to the gold price. Of course, that's something that we've seen over the last decade in gold producers' attempts to try and get the increases in the gold price to translate into their market value is that we've seen a massive sort of slashing of hedge books, forward sales at certain prices that limit companies' exposure to high gold prices. So those are all have pretty much been eliminated. And yet, of course, we're still seeing the prices lag behind. But I think definitely that is something we'll see. Barrick Gold, the biggest gold producer, they of course saw their share prices decline just recently with the announcement that they'll buy Equinox Minerals, a copper miner. And Barrick has said that they're probably not expecting to announce a dividend increase for the next 2 quarters, so 6 months or so, just because of the financing that they took on for the Equinox deal. And then Kinross has also said, they're not, the CEO Ty Burt said he's not expecting a dividend increase in the near future. But a lot of companies, for example, Agnico Eagle Mines, a number of firms have indicated that they will probably be looking at increases during 2011, assuming that the gold prices stay at these high levels. And then presumably they'll be hoping to see that translate into their market value as well, wooing investors, not only just obviously for the increased dividends, but also different classes of investors that maybe require a certain yield in the stocks that will then be able to invest in those companies.
Thanks, Lizo, for your time. That was the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquin in Johannesburg for Creamer Media.
Donate now and give 15 Rand a month. SMS JOIN to 41486.